I'm going to show you how to use market profile to day trade smarter in 3 simple steps. If you've written it off as something not worth your time, I dare you to listen to this. Hi, I'm Merritt Black, founder of Apteros Trading. We develop futures traders and provide real opportunity to turn pro. There's a ton of stuff online for how to use market profile. Most of it's bad. I'd like to share with you what actually works best for me and my NADRO methodology. By the way, I don't actually trade off market profile charts. Every chart that you use should have a job description. If it doesn't, get rid of it. But that's a topic for another day. But for me, my market profile chart's job is to help me frame context. That means I know what situation we're in. Context matters. For example, I could say, "I'm sorry," or "my bad." And they mean the same thing, unless you're at a funeral. So, market profile's job is to help me easily identify what is that current situation. And just like that analogy, context matters. Your best use of market profile is to identify these 3 things. Number 1, where is balance? Where is price spending time in building those large distributions? These exact balance areas are the absolute most important thing to identify. It's really not more complicated than that. Can you see where the distributions form the wide areas? Take note of these. We'll use it going forward. Number 2, what is the current condition? Where are we now relative to those prior areas of established balance? Yet again, it's not rocket science here. Are we breaking out and holding above a recent balance area? Are we rotating in between, in the middle of a recent balance area? Or are we breaking down and holding below a recent balance area? Each one of these signifies how we see things at a time, how we develop a bias, whether we become bullish, whether we're neutral and looking for what we call rotational behavior, or whether or not we're bearish a market. And each one of these 3 potential conditions come with what we call a line in the sand, a place where that condition would change, where that premise or that thesis or that hypothesis, as we call it, would be invalidated. And this is extremely important. It allows us to identify what we call the current market condition, imbalanced up, balanced, or imbalanced down. And number 3, what are the key features of recent profiles near where we're trading right now? More nuanced things. Where is there good excess? Where is there a lack of excess? And other more granular profile features. These features are useful, but keep in mind that where we are relative to prior balance is most important. We mentioned excess or lack of excess. These are good features to watch for. Excess is an area that's been swiftly and clearly rejected. It gives an indication that that area is not likely to be taken out in the current auction. We can see this on the profile when we have a nice string of single prints, 1 TPO period, on either the upper or the lower edge of a balance area. If we don't have good excess, that is, we don't have those single prints, that is actually an indication that that area is likely to be revisited sometime soon. Again, keep in mind that all this more nuanced, shorter-term features needs to fit within the contextual piece that we talked about in steps 1 and 2. With those 3 things, with that powerful bit of information, then you look to your lower time frame charts. Then you look to your order flow charts. And now you're armed with a huge edge over folks that are unaware of the situation. Context matters. Market profile is a great way to easily frame it. Every bit of how I use market profile and so much more is over at apterostrading.com. Trade well.